Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online valuation services for mediation and litigation based in St. Louis, Missouri. Today, we will discuss personal tax returns and tips for divorce attorneys with Jason Soman. He's a valuation expert in Orlando, Florida. He specializes in advising lawyers, business owners, and high net worth individuals on issues related to business valuation and forensic accounting in the context of family law disputes, shareholder disputes, estate and gift tax matters, commercial litigation, and all sorts of things. I think that a couple things that we do start to see is what if the parties are not reporting their income on the tax return. I think that we will have that situation happen very often. And what is an attorney to do at that point?
So you actually touched on that, Melissa, is, the tax return is a great way to get started and to kind of assess the case early on. But I tend to like to have more than one source for this information that's in the tax return. So, obviously, if someone is accused of financial wrongdoing, they may also be not so honest with the IRS. Only looking at a tax return would presume that these folks are honest taxpayers. And I'm sure, as you and I both know, that's not always the case. So I always try to get as many third-party documents as I can. Like you said, I will keep the tax returns, on the back burner while I'm looking through bank accounts, and I'm going to compare, do I see any transfers out to bank accounts that I'm not aware of in my, universe of bank accounts, or are there any inflows and outflows that kind of look a little suspicious? Something else that I've seen and is well known is that to get credit applications for folks, because when people are applying for a loan and people are applying for a mortgage and whatnot, they're trying to paint their best financial picture. And I'm sure you and I both know when a divorce is happening, people's finances all of a sudden, their assets are down, their income is down. So we try to get any third-party evidence in terms of bank statements, credit applications. I've actually been involved in cases where there weren't bank accounts reported on the tax return. And in fact, they were in a mortgage document that was actually subpoenaed directly from the bank. And that's because the other side wanted to hide that bank account. And it actually had a good amount of money in it. So I will always look at Schedule A, going back to the personal tax return. I will look at Schedule A. Schedule A reports mortgage interest. So if I see that there's a loan or a refinancing, I may want to acquire those documents or request them.